Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about why I believe the next 5 days are going to be relatively bullish for Bitcoin. As you probably know, we just had a BLS print from the Bureau of Labor Statistics that tells us that CPI actually came in at 3% when we were expecting 3.1%. This almost certainly confirms what we already anticipated, which was a rate cut coming on October the 29th, the next time the FOMC speaks. I believe that this is going to lead to a rally on Bitcoin because of the technicals, but also because of these fundamentals. So today, I'm going to share with you where I believe that Bitcoin is going over the next few days, and I'm going to share with you what this week means in the context of looking at what's going to happen on into 2026. I think you're really going to enjoy today's video. If you do, make sure to hit that like button, subscribe to the channel, and without much further ado, guys, let's go ahead and dive right on into it. Bitcoin right now is best charted like this, in my opinion. We're going to go ahead and delete everything off our chart and reconstruct everything that we have here. The first thing that we need to do is we need to analyze the market structure of this corrective movement. The best way, in my opinion, to do this is with an Elliott wave 1, 2, 3, 4, 5 pattern. As you can see, we have a 1 wave, a 2 wave, a very large 3 wave, a 4 wave, and a 5 wave. This works relatively well because you have all of the criterion for Elliott wave met. First and foremost, the top of the 2 wave, which remember, this is an uptrend, so that's the top, does not go above the bottom of the 1 wave. So check. We have 3 criteria. That's the first one, and it is correct. The second criteria is that the 3rd wave cannot be the shortest of the 3 impulse waves. So this is a check. And then the 3rd criterion is that 4 cannot go above 1, which is a check. So this is a confirmed Elliott wave to the downside from 126,000 down to our local bottom at 103,000. So the good news is if you pull 1, 2, 3, 4, 5, then you expect to see something called an ABC correction. Well, as you can see, we have our A wave, our B wave, and our C wave that is currently in the middle of being played out. Generally speaking, you'll know that it's a B wave because if you draw a fib right here from the top of the 5 wave to the bottom of, from the top of the 5 wave to the top of the A wave, then you will see the B wave correct right down here into the Fibonacci golden pocket at 0.618. Which, as you can see, is exactly where we bounced. We've found it significant support at 107, which is why I said yesterday an entry around $108,000 would be a pretty solid long entry position. Because after we bottomed out down here, confirmed that we held the 0.618, we've begun an uptrend, and there are a couple of different ways we draw those price targets. Number one, on the C wave, you might draw a price target in between 1 and 4 off of the original Elliott wave structure. That would give us a price target range for the C wave here between 116,000 and 120,000. Another way that you can do it is by pulling a trend-based fib extension off of the A wave, which would then give you a price target up here between 1.5 and 1.618, so about 119,000 to 120,000. And the final way that you can pull a price target for the C wave is off of the overall trend. Now we're starting to look like the original chart that we had earlier, and we look for the 0.618, which sits right here, or possibly the 0.5 if the market is extremely bearish. This gives us a couple of conclusions. If Bitcoin stops at one of these levels, it's going to tell us a lot about whether or not Bitcoin is going to drop down below $100,000. First and foremost, if Bitcoin stops here at the 0.382, which is 38% retraced back to all-time high, which is where we have currently stopped, and we'll look at this down on the minute chart here in just a second, because this is convergent resistance right here at approximately 112. Bitcoin is stopped there. If Bitcoin does not manage to get through the 0.382, then that means that Bitcoin is extremely bearish, and we're looking for an increased amount of sell-side pressure to come very soon. On the other hand, what I think is more likely is that Bitcoin has just broken through this downtrend. I know this is kind of complicated, but hopefully you're able to track with this. So far, Bitcoin has broken through this downtrend, is coming back to do an overside test of this downtrend. You see here, we tried to break through this downtrend, rejected, broke through it, rallied up here to the 0.382 here at 112,000. Now we're doing an underside test, and this is actually not a bad place for a long entry because you'd be able to correctly set up your risk to reward ratio, because what we would probably do here is we would take a long position at current market price, which is about 110,000. We'd want to pull our stop loss right here below this candle wick because this is our next lowest low, so we're going to want to pull our stop loss a little bit below that, and as you can see, it is. And then we would automatically start out with a 3-to-1 risk to reward ratio, which would give us a price target of 113,000. But if we look at other price targets for the C wave, at the very least, we would be hoping for 114,000, which gives us a 3.7% risk to reward ratio. So far, right now at 110,000, this is actually a pretty solid entry so long as you had your stop loss down here around 109, for example. Statistically speaking, that is a trade that will most likely work to your advantage. But once again, if Bitcoin does stop here at 0.5, and especially if Bitcoin stops here at 0.382, then that means the overall bounce, the ABC corrective wave, has pretty much failed. We would be expecting Bitcoin to come up to 0.618. If this were a healthy correction, they would still fall over. You understand? We don't expect Bitcoin to go back to all-time high until we break through 0.618 here at $117,000. So we are going to place our C wave price prediction here at 117. So you could even do a strategy like this on this long entry where you would have a take profit right here at maybe 116.5, maybe even just a little bit shy of that, just to be conservative, because we have enough risk factors down here. We're at 5 to 1, just right below this double top here. And then you also might consider taking some profits right here around 114. This is a trade that I will probably be entering, and I'm very excited about, because overall it does look like the next few days are going to be bullish. And it's not just the technicals. I also want to go over the fundamental reasons why I think the next few days are going to be bullish on Bitcoin, and they have to do with the Federal Reserve. We did, of course, just see today that inflation came out 0.1% lower than was anticipated. If we come over to the Bitcoin chart and we go to our calendars and we go to our economic calendars, you will see that inflation came out today. Let's scroll down. Inflation came out today. Where was it? Inflation came out today right here. And the forecast was 3.1%, as you can see right there. And actual was 3%. So we actually beat expectations, which basically we already knew that there was going to be a rate cut coming from the Fed, but that pretty much guaranteed it, that there was going to be a rate cut coming from the Fed. Now, the Federal Reserve meets in 5 days on October the 29th. That timing is very important because if we come back over to our chart and draw a vertical line here, then it matches up time-wise on this chart. It makes sense if we look at this vertical line being the date of the FOMC meeting that Bitcoin might grind up here moving into the FOMC meeting, which would be the price target for the C wave, which is why this is such a solid trade entry at the moment that I am considering here. And part of the reason I think Bitcoin might also grind to the upside here is because that's exactly what happened leading into the last CME future. That's what happened leading into the last Federal Reserve meeting here on September the 18th. We grinded right into that top. Now here's the problem. On the one hand, if Bitcoin grinds up to 117, 118, that's very bullish. And if we're able to break through that, break above 120, then yes, we're almost certainly going back to all-time highs. However, if Bitcoin stops out right here between 116, this local high, and 118, this local high from the last Fed meeting, because we're rallying into the Fed meeting the same way we rallied into the Fed meeting the last time, and then we sell off post-Fed meeting the same way we sold off post-Fed meeting last time, then what you, in a sense, have created is one gigantic head and shoulders pattern with a neckline that would look something like this. We can't really determine exactly where the neckline would be yet. I know the chart's getting really messy. There's a lot of things going on here. But this head and shoulders pattern would give us a price target. If we extrapolate it down to, oh wow, there's that number again, $93,000. So here is our concrete analysis. Like, this is really very simple and very important. Bitcoin is probably going to see a rally up to $117,000 very soon. If it doesn't, and this downtrend fails, then I will bet you just about anything that Bitcoin's going back to 100K. On the other hand, if Bitcoin rallies up to 117 and breaks through, then we're almost certainly going towards all-time high. But if Bitcoin follows this C wave and then starts trending down again to create another 1, 2, 3, 4, 5 wave down here, right? If it does that, then again, price targets would be down around $94,000 to $100,000. So I've been saying the exact same thing for 2.5 weeks now, ever since the 1010 crash. And I'm going to say it again. And people say, Jeb, you're flip-flopping. You're not understanding everything I'm saying. If Bitcoin does not manage to get above $116,000 to $118,000, then Bitcoin will most likely correct to between $94,000 to $100,000. This is what all of the charts tell us. This is also what all of the sentiment tells us. It feels like we're in a bear market right now, even though we're not. On the other hand, if Bitcoin manages to break through the zone of resistance between $116,000 and $120,000, sky's the limit, Bitcoin explodes. So there's two real theories about how you would go about synthesizing this data. Either one, Bitcoin is going to rally up and until the Fed meeting. The Fed meeting just so happens to be at the end of this month. And then if Bitcoin is over, let's see, what does Bitcoin have to be over for us to have an official Uptober? What does that have to be over? If Bitcoin is over $114,000 by the end of the month, then you have October. Bitcoin was up, even though it was just by a little bit. So there's a possibility that that head and shoulders pattern down the short-term time frame gets invalidated because we saw 1% bullish October, which would allow for the, hopefully, theoretically, Moonvember and on into, a Christmas time for Bitcoin. On the flip side, if Bitcoin rallies into the Fed meeting. Fed meeting happens. What Bitcoin traditionally does post-Fed meeting is it goes through a major correction. If that occurs, then that is where Bitcoin would likely fall below $114,000. We would have a bearish October, which would probably lead to a lot of sell-side pressure because people are freaked out thinking we're going into the bear market. Something you have to consider is that even though I think the 4-year halving cycle is dead, it does just so happen that October the 6th is like the exact date of when the 4-year halving cycle would call the top. So far, the 4-year halving cycle did call this top. And it calls this top right here on October the 6th, the exact top of the 4-year halving cycle Bitcoin bull market. And so the sell side pressure from that narrative could very easily drop Bitcoin down towards that $94,000 to $100,000 price target for one last back test of our ultra long-term bull market uptrending level of support right here, where Bitcoin would then theoretically bounce and rally. If not, once again, we've talked about how our bear market price targets are in Q4 of next year between $55,000 and $75,000. So prepare accordingly. Always be prepared for a bear market because one could always be around the corner. We could see a 50% correction on Bitcoin. That would be a drop down once again to about $55,000 to $75,000. See our previous video, yesterday's video, to see the analysis of why we would say $55,000 to $75,000 would be a bear market bottom should one occur. But in my opinion, so long as Bitcoin holds above $92,000 to $94,000, we are still in a bull market. If Bitcoin drops below $90,000 to $92,000, that is where we would be in a bear market. For any of you guys that understand programming, you'll kind of understand these if-then statements. I am not going to come here and tell you that Bitcoin is going to do such and such guaranteed. I don't do that because Jesus says that we should not say that we're going to go into such and such town and make such and such money because we don't know whether we're going to be alive tomorrow or not. We don't know anything about the future for certain. Only God does. But what I can tell you is that if Bitcoin is above 116 to 120, the likelihood is we're going to blast off. And if Bitcoin is above $90,000 to $92,000, then Bitcoin is not in a bear market, technically speaking, and we're likely to continue higher. And then third, I can say if Bitcoin drops below $90,000 to $92,000, then a bear market down to $75,000 would be the most likely outcome. Right now, we are in between 116,000 and above 94,000, which means that Bitcoin is really in limbo. It's got a lot of decisions to make. If we break above 120, it's a very obvious rally higher. If we don't, then it's a very obvious correction lower. Look, guys, if you want to succeed in the cryptocurrency space, you got to learn how to trade. You got to learn how to invest. I'm going to tell you the best place to do so, and that'll be over here on Femex. If you guys have not already signed up for Femex, you absolutely should. I'm going to tell you exactly why. Femex is the best cryptocurrency exchange that you're going to find in the cryptocurrency market for trading Bitcoin and cryptocurrencies. They are such a good exchange. There are so many millions of people that are using Femex. And one of my favorite things about Femex is the way that they performed during the most recent correction crash when Bitcoin, liquidated $20 billion. There was very few, there was basically no unwarranted liquidations on Femex. Femex, more or less, was completely up. In fact, they were completely up. There were no crashes. There was no outages. There was no issue with the markets. There was no issue with liquidity. Stop losses were triggered. So anybody in a leverage trade that had proper risk management did not get liquidated on 10/10, that fateful crash. And so Femex was trustworthy through the crash. A lot of other exchanges were not. They went down. They had outages. They might otherwise be good exchanges, but they were not trustworthy with their customer funds during that time because people were not able to log in. They were not able to buy the dip. They were not able to get triggered for stop losses. Femex took very good care of their customers. And for that reason, we brought Femex on as an exchange partner. And I really want to encourage you to check them out if you have not already. Great exchange for you to go and start doing some trading on Bitcoin and cryptocurrency so that you can incorporate some of these concepts, incorporate some of these trade setups that we have been talking about. Last couple of things we're going to look at here is that, the minute chart down here is updating in real time. And you can see that Bitcoin has fallen back down to do the overside test of this downtrend. If Bitcoin fails here, right? We have a downtrend here on the 1 minute chart. If Bitcoin fails here and does drop below with confidence, this level comes up and back tested as resistance, that will be an extremely bearish sign. If I'm wrong about Bitcoin going up towards 114 or so over the next couple of weeks, that is a nail in the coffin. And just going on to another chart that's a little bit more clean to make it look really simple, that would basically mean that Bitcoin would have failed to break out of this channel. And if Bitcoin does indeed fail to break out of this channel right here around 112, then that means all of this market over the last several weeks has been nothing more than a bear flag, which would point at, you guessed it, $90,000. Okay? So here's the thing. If Bitcoin, when you watch this video, if Bitcoin's dropping down to 107 or something again, and it has failed to break above 112, if it's done that, it's a very bad sign. Okay? Just keep that in mind. Bitcoin is not out of the woods yet. It is still on a from a technical standpoint looking overall very bearish because we're having a very difficult time even getting through 0.382. So a correction could be in the near-term future. If a correction is in the near-term future, once again, these are most likely generational buying opportunities. Most likely generational buys will take place down below $100,000 should Bitcoin ever drop down there again. So I'm not worried about it. Bitcoin is still the best performing asset of the century, and I believe it will remain having that moniker for at least the next 30 to 50 years. So I highly encourage you guys to consider an investment in Bitcoin at any price below $100,000. Even if we drop down to $50,000, the lower you get, the better the entry is. So I highly encourage you to hit the like button, subscribe to the channel, and stay tuned for more content. That's been all from me today. Make sure to check out Femex down below. You can get access to if you sign up with us, actually based on your trading volume, you can win an iPhone 16 Pro Max. You can win thousands of dollars of rewards. So I really highly encourage for you guys to check that out. If you enjoyed today's video, make sure to hit that like button, subscribe to the channel, stay tuned for more content, more technical analysis, more trading and investing, financial management, and market analysis content. I appreciate you being here. And before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.